The year is 2020. As the old financial empires collapsed and crypto drowned in noise and false prophets, one man lost everything. And in that loss, he was called. Through the wreckage of his own failure and the precision of his charts, a higher force revealed what others could not see and entrusted him with a mission to guide others through the chaos he barely survived. They call him Sacred Prophet. And now, the revelation is yours to claim.
Welcome, everyone, to Sunday Fuel for September 14th, 2025. I am your humble leader, Sacred Prophet, here with my trusty sidekick and Aaron in training, Peter Bad Guru Hartman. Sunday Fuel is a show that is dedicated to teaching you how to trade Bitcoin at the highest leverage possible. Hey, if you're going to be in this game, you might as well do it right. And Peter, it feels good to be right. Last week, we talked about the preparation of the short squeeze for Bitcoin that'd be underway. Bitcoin was down at 107,000, and people were sort of worried that, hey, things are going to go south. But your boy, Sacred Prophet, was saying, hey, something seems to be brewing here. Something seems to be developing. And that is a short squeeze for the ages.
Question.
Was I right?
Well, I don't know. I have no idea. But before we do that, you said the highest leverage possible, but you do 50x, not 100.
Yeah. So, I mean, one day I will be able to get all the way to 125x leverage and trade that with aplomb. As it is right now, with skill, with decent returns. Right now, I've only been able to get up to 50x leverage with any sort of regularity. So that's the highest leverage I've ever seen anyone trade regularly and make money at. And by what I mean to say, when I say see other people trade that way, I've only ever seen myself trade that way. Everyone else is out there with 20x leverage, 10x leverage, 5x leverage, 2, thinking they're doing something out here. No. But when you are in contact with the Lord of liquidity and you can feel, see, taste, smell the markets, well, you could take a little bit more risk.
All right. So you say there's a short squeeze happening. How am I supposed to tell that the short squeeze is happening? I don't know. I'm looking at Bitcoin 115.8. I don't know that that's a short squeeze.
Well, you have to take a look at what the shorts are doing. So if we take a look at the Bitcoin liquidation map, we saw last week that the Bitcoin leverage, the shorts, were at about 20 billion, taken into consideration Binance, OKX, and Bybit. You remember this? Last week it was like around 19 billion, 20 billion short, and about 100 million long. Do you remember seeing this?
I do remember, yes.
Right. And we are now at 9 billion long. Right? So about half of them got liquidated or closed their positions.
Right.
And what I've been telling everybody is that when you're looking at this CoinGlass liquidation chart, you want to sort of equate $1 billion worth of shorts or longs, $1 billion worth of liquidations with 1% move in the market. So we had about a 9%. We had about a 9% move, which equated to about $9 billion being liquidated. That's exactly what we saw in the chart. So from the lows of last week to the highs, we had something about 8.62% move. Now you tell me, somebody else is telling you how much it's going to move and how to tell that. All right, that I'm off by 40 basis points. All right, you go show me, you share that chart, you share that Twitter account, you share that YouTube account, and you tell me somebody else who told you last week at the lows that, hey, Bitcoin is about to shoot up because of the short squeeze, and prove it to you. You do that, Peter. I'll wait.
Actually, yeah, that's pretty, okay. It's pretty badass. I'll give it to you. I'll give it to you.
Not happening.
You underestimate my power.
It called for it, Peter. It called for it. All right? So we have the short squeeze that's happening right now. So we know it's a short squeeze because the shorts are being liquidated, right? The price is moving in the time frame we're talking about within a week with the 9 billion liquidated. So the big question here is, what now? So for the trade coming up this week, and I should mention, I did not talk about the trade last week because for two reasons. One, when the week opened up, if we're going to go back to the chart here, Peter, when the week opened up, we were too close to the level. So our level was here at around 110.5. And when we opened up, we were very close by. So I don't like calling out trades when it's like less than 75 basis points, 1%. It's not really worth it. What I should have mentioned, and what I have mentioned in the past, is that if the price opens up and we are above that level, it's bullish. If we're below, it's bearish. So we're above that level and it was bullish. Now the price moved up and then we got this massive liquidation on Tuesday. So on another reasons why I didn't want to jump into a trade last week is that there was a bunch of uncertainty, right? The price could have fallen down even lower, right? We're not actually near any significant support zone. We're just hitting our waves that's providing us with support upwards, and we have liquidity that is going up and to the right. So we see over here, we have our wave line, this yellow wave line, which is our yellow wave line up. We have the volume for the week that is increasing, and we have, of course, our long-term global net liquidity that is also up. But this does not mean the price can't fall down. So I don't like jumping the gun, and when you're in a situation like that, I will never recommend something that has, like, let's say a 60% chance of working. Not interested in that. But if you have these indicators on the chart, you can make that decision on your own, right? Plus, even as we pulled back, if we had pulled back here for the week and this drop had hit the 110.5 level, then I would have been right there telling you guys to buy over there and write it up. But we just missed it, right? We just missed it over here. We actually got to a low of around 110.7, and 110.5 would have been the buy zone. Now, as you're seeing, we did hit these levels. This is a volume weighted average price level for the 3-month, and the price violently reversed down and then back up, right? But again, in these volatile events, this is more than enough to liquidate you, right, Peter? So if you got in here, let's say you got in here right at the beginning of the week, and you decided you wanted to hold that, the idea is that you would hold this up, let's say, to the next level up here, which is 114.3, right? This is another weekly level. And you would have been liquidated here, right? So it's difficult. This is one of those things when you're dealing with 50x leverage, is one of those things where you got to choose your battles carefully. So for a lot of people, just watching the short squeeze happen is what they did. Now, I was already in the trade from over here previously, so that's fine. Like I mentioned 2 weeks ago, you can get in and you could try 2-3 times in order to get into the trade if you want to risk that, but I was taking risk in my account. All right, all that to say, we have this 9% move up. Now, do not be surprised that the price, when it moved up last week, hit the 114.3 level exactly. It wicked there, consolidated around there, then moved up again in order to hit this other level. This is actually a 3-month level, and now we're consolidating around this level, right? All the levels that we're seeing here for the price where it's hitting, all the levels called out by the indicators. Not making anything up here. You're seeing it on the chart.
Which
right?
indicators?
Multiple indicators. So we have here the levels indicator. This one over here, let me just hide the other one so you can see it. All right, this levels indicator right now, we're set to see the 1 week and 1 month time frame. All right, the week is showing in red. That's these levels over here. And we have 3 month here for the green. Okay, so these levels call the price to it. That's what these levels are. They're calling the price. Whenever the price is nearby, chances are it's going to go hit that level before it either continues or reverses. But we're going to see some price action where that's where it hits. So since we got up to the weekly level of 114.3, it's no surprise that the price decided to move a little bit further and get to this 115.4 level. We don't always talk about the 3-month level, but all the levels, all the default levels in our chart, daily, weekly, monthly, quarterly, are all levels that are always appearing on the chart when you use the indicators, unless you turn them off. So now the important part that we want to see here is that we are now consolidating above this level. You see how we moved above it? And now we're consolidating above this level?
Mm-hmm.
All right. Peter, pop quiz. The chart come 10 p.m. tonight, the level that we're going to be taking a look at for the weekly trade will be 113.6. It'll be around 113.6. Again, unless the price moves dramatically in the next couple of hours, it'll be 113.6. If the price is above this level, what is likely to happen to the price?
We're going to fall into it.
Yeah, there's a great likelihood that the price falls from where we are right now down to 113.6 and then bounces off that level in order to move forward. This is the most healthy way, the most healthy bounce we can have. Okay? If that happens and we bounce up over there, buy at that level and ride it up. Because chances are more shorts will come in as that price comes down. And this will be a move that's around a 1.8% move. So you can make almost 100% on that short if you were to short that there. But other shorts in the markets will get in. I don't recommend shorting a bullish trend, but that's up to you. But if you get that move and you get that bounce, you can now ride up the rest of the shorts, the rest of the 9%. Right? And the rest of that 9% would bring us to something along the lines of, from that level, 123,000, 124,000, right?
And is this financial advice? And should I do my own research?
This is not financial advice. Do your own research. Or
or what?
Or just do what you do normally, and you just sort of like risk anyway. People will trade out there without any sort of plan, and the idea that I'm giving you a plan that I gotta hedge what I'm saying because what the SECs could come at me. Come at me, bro.
What? No, don't come at me, bro. No, absolutely.
All I'm
not.
saying is what
How do
I'll
I
be doing.
Stop this stream.
All I'm saying is what I'll be doing. Okay.
Right.
That's all I'll be doing.
Well, you
So
said you said take this trade. That's why I asked you that. If you say this is what I'm doing, we wouldn't be having this conversation right now.
Thoughts and opinions expressed by Sacred Prophet are not necessarily held by Tom Hartman.
Right. Okay.
I absolve myself from that. I disassociate myself. Sacred Prophet.
I really like the SEC. I think they're great. They're wonderful people. They should reproduce.
They're doing a great job. They're making the world safer for
they're doing a great job. They're doing a great job. Yeah.
Now, if the price,
I don't want to pick fights, Tom. I don't want to pick fights. I'm a peacemaker. Okay. Moses dies in the desert, and then Aaron has to take it on, and I don't need the extra baggage. You know what I mean? It's already dry in the desert. Don't need extra baggage.
Don't worry about it. I'm on the side of the Holy Global Empire. Nothing's going to happen to me. All right. What if, Peter, the price doesn't retrace to 113.6 and just keeps launching up to the next nearby level to the upside, which is 119.9, which, if you guys will remember, is one of those other in-progress levels that we talked about 3 weeks ago. All right, so 199. If the price moves directly there, what does that suggest for Bitcoin? What should you keep in mind?
Bad news bear. It's unhealthy to go up that way, and we'll have a correction. We'll come right back down, and it probably signals that we'll go even lower.
That's right, because if the price moves up over here in order to clear that level, this would be technically a lower high from this high. And if we then get a pullback, The next level that's unmitigated, because we have no other levels above us, the next level is 113.6. So the idea is that the price will move up over here and then down to 113.6. Now that could still be bullish, but the longer it takes for that to occur, the more difficult this trading becomes, the heavier this bull market becomes. So what we would love is a pullback to 113.6 and then a rise up. But the odds that the next move here is that we're getting to 199 is pretty much baked in the cake. Sure, we could have a whole turnover. Never saying that I'm perfect. Never saying that can't happen. There's always external shocks that can occur. And who knows if more Bitcoin whales decide to sell off. But if things continue the way they are, this drift upwards should continue this week and get into 119.9 this week should be pretty much guaranteed. All right. We have to talk about the macro context that we're in right now. In 3 days, we are going to have the Fed minutes come out. Sorry, not the Fed minutes. We're going to have a Fed meeting. And that means we are going to be talking about the idea of rate cuts. And right now, the markets are pricing in a 25 basis point rate cut. Okay? This is a problem. The market doesn't really want a 25 basis point rate cut. We're seeing S&P at all-time highs. We're seeing NASDAQ all-time highs. We're seeing the dollar break lower, guys. Dollar break lower. Right? We talked about this idea of the dollar breaking lower here. That would be unbelievable. But we're right at the edge. We're right at this trend, poised to break lower. So the market, what happens is that the market tries to force the Fed's hand. People think the Fed makes a decision and the market moves. No. The market moves, and then the Fed generally has to sustain that decision. Occasionally, the Fed will say something beforehand. They'll forward guide. But usually what that is that they'll float ideas out into the wilderness. They'll float ideas out to see how the market reacts depending on what they might plan to do. That's why you always have Fed chairmen come out and go, well, Bullard decides he thinks he dissents on what Powell wants to do, and Wallace thinks that this should happen instead. And then you're like, oh my God, there's really they're coming out and they're saying things against the Fed. I can't believe they're saying things against Powell. No. They're testing you to see what you respond to, okay? Do you want Snow White and the Seven Dwarfs with CGI, or do you want live action? They want to know. They need to test out with trailers to see how you're going to react. Because the Fed is there in order to lower volatility within the markets. And if they test something out in the market, has a connection to go, hey, whoa. Did you believe me? Honey, did you believe me? Did you really think I was going to leave you? Yeah. That's what they're trying to do. All right. So
we did talk about the Fed rate cuts earlier this week. So we have some clips on the channel. If you haven't seen it, go ahead and check that out. Tom reacts to some of the CNBC clips that went out. Very interesting. So not only is the market pricing in 50 basis points cut, but they're not representatives.
They're 25 basis point cut.
The market?
Well, it depends how you see it.
Well, I'm just referencing the clips. I'll let you talk about it, but the clips where people were going on CNBC saying, no, the Fed's are going to do 25 basis. People are jumping the gun here. It's going to be 25. So definitely go ahead and check out those clips. They're very cool.
Yeah, so the question is, the market has moved up dramatically. Dollar is down, oil is down, S&P, NASDAQ are at all-time highs. Doesn't matter that we just found out that 2.1 million jobs have been erased, never existed to begin with. They're just like, hey, bad news. Bad news is good news. All right, so the question is here, has the market moved up so dramatically because it's priced in 50 basis point cut or a 25 basis point cut? Now, the futures market is pricing a 25 basis point cut. So it could still just be that the market has moved up this much because the Fed is going to be on a rate cutting cycle. However, we have seen Scott Dreamboat Bessent, Secretary of Treasury, going around going, hey, 25 basis point doesn't make any sense. 50 basis points is what we should be doing. Heck, we should be cutting 1.5, but we'll take 50 basis point. That's essentially what he's saying. That the Fed has been so behind the curve, just like they were during COVID and inflation, and that the Fed is out here. Their numbers for the jobs not only were wrong in the past, are so wrong that if they had these numbers back then, they would have cut. So he's like, well, we got to get going on these cuts then. All right. So that means the Trump administration wants 50 basis points. All right. Let's just make that clear. The Trump administration wants 50 basis points. And Powell has already bent the knee for rate cuts to begin with. So the question is, does he go all the way and do 50 basis points cut like a good boy? Or does he go against our fearless leader, Papa Trump, and just do 25 basis point, just to be like, I'm not partisan? What does the market do for that? If there's more infighting, then you can imagine a reversal of this trade where problems are happening and the market, in a sense, can force the Fed to overcompensate by having a conniption and drop in dramatically, just giving up a bunch of gains. So that the Fed has to come in next time and go, hey, look, or they have to start forward guiding. Whoa, next time, heck, we might cut 75 basis points. Like, we might even do a major emergency cut or whatever. We'll see what happens. Now, this is what I find so exciting, and I don't want to go all the details here. You guys could take a look at the videos that we put on the Sacred Profit channel, or you can go see Peter and I talk about this on Traders Post on the after hours, which go take a look at the Traders Post YouTube channel. But essentially, it can go so many different directions. It's pretty volatile right now. I could see all kinds of different things happening. And in the odds market and futures market, things have been fluctuating wildly. All that to say is that Bitcoin, it is no guarantee that we don't just get a lower high in Bitcoin and then down. But regardless if we do go down, you have to keep in mind, if you think this is the end of the cycle, you're arsler. Absolutely ridiculous. Okay? The Fed has started a rate cutting cycle, right? They want money come into the markets. They want QE. They're bending the knee to the administration. The administration wants markets to go up and to the right. Midterms are coming up. All right? Money's coming in. So even if we do get a drop, whatever drop happens, I will be buying it. What you do, you can lose your money if you want to. I'm going to be buying that, right? Because all the signs point to that all the powers that be want it to go up. The Fed wants it to go up, just not too much, and the administration wants to go up a lot. Nobody's talking about the markets going down. Nobody wants that. That's not on anybody's bingo card. Nobody wants that. So all-time highs will continue until morale improves. Come at me again after the midterms, and we'll be on the short side. But for now, it's long only, baby.
So did you say what you had to say about the short squeeze that's in progress? You talked about the liquidation map, but is there anything more about that?
The next level of liquidation, I believe, brings us up to the level of 119.9 like we talked about. After that, we can't really talk about short squeezes anymore because there's not going to be enough tinder there. The last thing I want to say is that last week we had only 100 million long. Remember, we had this almost like 150, 200 to 1 shorts to long. Now we're at 9 billion short and 600 million long, which is still not a huge amount, but we cut down by an order of magnitude the difference between the longs and the shorts. This is what we want to see, and this is what we normally do see in the middle of a bull market. So what we're going to be paying attention to over the next couple of weeks, couple of months, is that we want to see the number of longs outpace the number of shorts. Once we see that, that's the sign for rocket ship. I'll say that again. Once the number of longs, let me say that one more time. Once the number of longs outnumber the number of shorts, so that we have more levered longs than levered shorts, that'll be the signal that we're off to the races. And we could see 150,000, 200,000 on Bitcoin or even higher. once that happens.
And where
Now,
do I
if
see this happening? Where do I have to go to see if this is happening?
That is on the CoinGlass liquidation map that we take a look at every week. You head over to Bitcoin Exchange liquidation map. You switch this to Bitcoin 30 days. You refresh. And what you're looking for on the right side over here, when you put your mouse over, is for this number. On the right side, right now it says 9 billion. You want that number to be lower than the number that we see on the left side. So right now we have 600 million long and 9 billion short. We want that to be inverted. We want more longs than shorts.
But I thought you said that it's when the short side is really high that's the rocket fuel that catapults Bitcoin.
Yeah, so we're already seeing that, right? Off the lows, 9% move up. So you can imagine that gets us up to where we are right now. Another liquidation of 9% gets us up to near all-time highs. And if the longs now pick up that baton and now they go long still, that's where we get into the euphoria phase.
I see. So both sides could both sides can move Bitcoin up. It's not just the shorts, but it's also when there's a lot of longs.
Yes, but remember, the shorts are forced buyers. That's why they're Tinder. If a catalyst happens, whether they want to hold the shorts or not, they get liquidated and the price jumps up. The longs are all voluntary. So if there's no hype, there's no euphoria, like we haven't seen. We haven't seen euphoria since the bull market started in 2023. We haven't. We saw a little bit of fudging around the edges, but we haven't seen that, right? Think of last cycle, how it was with NFTs and meme coins. Think of the cycle before with Ethereum and all that. We're not seeing these massive moves because there is no hype, no euphoria because of how bad the economy is going. People have less disposable income and that sort of thing. We've been seeing institutional buying over the last 2 years. But now that the rate cutting cycle is happening, we can see some pretty dramatic moves. And as easing starts to happen and the shorts really are in a state of like, look, they're not, we don't have the tightening of the global financial system like we were expecting, and the shorts get out of it, then as the longs get performant, right? As more longs make money, more people get convinced, hey, now's the time to do that. Higher performance, people chase higher performance, and all of a sudden now you have this runaway market. In the same way that we have all-time highs for the NASDAQ and all-time highs for the S&P. Same way as that. So once people start printing money, that's where you get the euphoria on the other side. But those are not forced buyers. Not exactly. They're not forced buyers, and so they're not the same thing as the rocket fuel that shorts are. Until we get to the other side.
Okay, so I understand. So if I understand correctly, the shorts come in, that gets ramped up, the shorts get liquidated, that causes the price to go up, that excites the longs, who then come in, and if they pile in more and more, that encourages more people to go long until we hit our all-time high and hit our top.
Exactly. Until the euphoria phase is there, people are levered long. They think they could do no wrong. You throw a dart, you make money, whatever the flavor will be this time. And then that sets up the right conditions for the longs to be the Tinder to the downside.
Maybe I shouldn't ask you this now. You can save this for later. But at what point in this process do altcoins start to get juiced?
It's already started to happen. So if we take a look at altcoin season metrics, just to show you some general ones, if we take a look at coinmarketcap.com, what you'll see here is that if we take a look down here for the performance of Bitcoin, we have Bitcoin at around 6%. It's like oscillating between 6 and 11%. And before, Bitcoin was at the near the top of this list. But now we're seeing that a bunch of these altcoins are overperforming or outperforming Bitcoin, right? So you have SAN 11%, you have BNB 41%. I think BNB hit a new all-time high. Solana, ADA, all these coins are outperforming. So when you're starting to see that, you're seeing that in general, the altcoins are outperforming Bitcoin. One, that's a lot of what people want. They want the altcoins to outperform. It's an indication that people are taking more risk. They're going out the risk curve from the safer Bitcoin into altcoins, and then that starts to bleed into other parts of the market, because as those performances go up, people have more money, people have more collateral, they can lever out what they're doing more, and then there's more credit creation that happens within or liquidity creation that happens within the crypto space. So right now we're seeing the altcoins starting to outperform, and the expectation is that they just continue to do so as we move forward over the next couple of weeks, couple of months. There is one last thing I should mention there. As prices move up, the value of people's portfolios goes up. As the value of people's portfolios go up, they could borrow against it. If they can borrow against it, they can then reinvest more into what they're doing. And so you get this vicious cycle, or virtuous cycle, depends how you see it, virtuous cycle, where the higher the performance, the more money people have, and those same people are then rewarded for their risk, and they have the money to take more risk. So you can get this perpetual cycle where it just ramps up. And if it happens before the end of the year, so December is generally considered, we often wait for what's called the Santa Claus rally. But when an asset is up, or when people in general are up in profit by the end of the year, when they start the year fresh again, generally speaking, their books are clean, reset, and now they have a higher level from which to borrow from. And so both in equities and in crypto, you could have this process where there's a buyback that happens. People take that extra, they could take out loans off their assets and then reinvest into the market in January. And since people know that this is going to happen in January, if the prices of assets are up by the end of the year, they could front run that in November and December, right? Remember, the rally in Bitcoin, the bull market in Bitcoin started in October 2023. Why? Because as soon as we got past the volatility event of September, October, what the Fed's going to do, the whole issue of 4 times during the year that it's dangerous for investors. Once we got past that point, then that relief was there. We could see that in January, there's going to be reinvestment. Reinvestment starts now. And from the end of October, that's when the bull market started. So if that same sort of thing can happen again now, then we could have, by the end of the year, a rocketing up that just blows people's minds off. Like if you take a look at the Bitcoin from 2023, let's take a look at that real quick.
You talked about this last year, if I'm not mistaken. I'm pretty sure
the year before that.
Yeah.
So over here,
did we get those blowups in December last year?
What happened in the last year? We got.
I think there was something where
it was a rise up. So if we take a look at November 2024, so we had a low here in September. So September 6th or so, there's some volatility, and then here by the end of September, beginning of October, we had this ramp up. Right, so Bitcoin went up something like.
Oh yeah, I remember. Yes. Yeah,
it went up 72%. The year before, again over here, this is the low in September. We got past the volatility event. Bitcoin then went up 178%. Again, at the low of the cycle, this is the low started here around November, and then moved up from there. It moved up here about 100%. So this sort of thing is like clockwork. If the market is up, if we get past this weirdness in September, October, we don't know what happens, it's sort of silly not to take that ride, right? Because again and again and again, we've seen that that's where things run up. Now, there is one caveat. Generally, the bull market for Bitcoin lasts about 1,064 days. All right? And then it crashes for about 365 days to 400 days. The 164-day period ends in the second week of October this year. which is why I'm very cautious about this, that we could actually get that run up, peak, and then fall.
Mm-hmm.
Could totally happen, right? It doesn't mean that the NASDAQ and the S&P can still make all-time highs, right? There's no promise that says both of them have to be correlated. We could get that peak in October and we fall. If that happens, no problem. The trigger is if we fall 50%, which, I mean, there's no way out of that. That's the only thing I've seen so far. Falling 50% is the indication that we're in a bear market. Wait for a bounce, and we start shorting for the next year until we go down. If that doesn't happen and this cycle gets a little bit extended, fine. It gets extended and we can get that run up. So I fully expect that if the crash doesn't happen, or if the crash does happen in October, that we're going to have a year bear market until we get to next year. They pump in order to get the numbers up for the midterms. We'll see. If it doesn't crash in September, October, I'd be very much looking at March for the actual crash. I basically bet dollars to britches that's going to happen, but we'll see. These things can, we could be in a different type of cycle. There's no way to know for sure. You just want to take your bets accordingly. But you certainly don't want to be trying to get this long. I would say try to get, if we get past this volatility period, go long. But if we get a massive drop in October, end of September, early October, I'd be looking for the peak of the cycle.
This is all very exciting, Tom. And I just want to remind everyone, I want to remind myself that top, bottom, we don't care. We can make money going up. We can make money going down. What's important is having clear
right, I'll top
eyes.
or bottom. I don't mind.
Right. We want to have clear eyes. We want to see clearly, and that's what the indicators allow us to do, sacredprofit.com. All right, Tom, I don't want this to go too long. I do want us to talk about how the heck do we do 50x leverage? Before we do that, did you have anything to say regarding what you've been talking about?
Well, for that, we're going to have to do
the Fed cuts.
We're going to have to do that tomorrow to go over the 50x leverage. How to do that, but I'm going to give you guys a nice walkthrough of how to actually set that up. I know some people have been asking, and hey, I take it for granted, so I will be showing you that. But as far as sorry, go ahead.
In the chat, we have Alfredo G, who's asking, altcoin season when Bitcoin flattens? Question mark.
Yeah, so in altcoin season, Bitcoin underperforms, which is another reason I do like the leverage trade on Bitcoin. I find it difficult to trade high leverage. I find it difficult to trade high leverage on altcoins. Because when you're trading at, let's say, 50x leverage like I'm doing, you can only suffer a 2% drawdown before that position gets liquidated. And when I'm dealing with assets that are 140 vol, right? So you're in an asset and you're like, oh, this grew up 800%. Yeah, but it took 30% drawdowns in like 2 weeks. Right. It's very hard to time those bottoms, very hard to get the rises. So in fact, I am more comforted by the lower volatility of Bitcoin, because those other ones I can just buy and hold and see what they do, like I do with my altcoins. But for Bitcoin, I can actually leverage. I could actually take more leverage because the volatility ebbs out as people go to altcoins for their risk. So those 2% drawdowns that liquidate me, or that might liquidate me in Bitcoin, would happen less and less and less. So yeah, Bitcoin gets flattened, but it actually makes it more attractive for high leverage trading, especially with the levels that we're targeting, and we have a clear idea of where Bitcoin can go.
Interesting. I never thought about that. Thank you for that question, Alfredo G. So when Bitcoin flattens, right, the cycle is done, then altcoins pick up. I didn't know that.
Well, Bitcoin doesn't flatten all the way. It gets, the altcoins outperform it. So Bitcoin can still double from here, but the other ones might, Solana might go up 300x.
But aren't these altcoins
1,000x? 1,000%, sorry?
Altcoins. Aren't altcoins right now outperforming Bitcoin? Didn't we see that in the chart?
Altcoins right now are yes, altcoins right now are outperforming Bitcoin.
I would imagine that they routinely outperform Bitcoin, no?
No.
Huh.
Absolutely not.
Interesting.
Bitcoin's been up. Well, when we're talking about altcoins outperforming, we're talking as an aggregate for the market cap of altcoins. Any individual or small subset of altcoins obviously can outperform at any time, but it's more on the whole, the altcoins outperform Bitcoin.
I see. All right, cool. Folks, we are doing a new video series when it comes to understanding the markets. So we're taking a look at CNBC clips, mainstream media clips. If you have a clip that you want us to react to, that you want Tom to react to, let's be honest, then send them in. Let us know. You can share it on X. You can post it down below or just ask the question. You can expect us to be doing rebuttals on and commentary on anytime Jerome Powell speaks. So September 17th, definitely check out this channel when Scott Bessent, Dreamboat Bessent, I think Tom calls him.
Right.
Any of the big players are talking about crypto or talking about the markets. We're going to be talking about it here. So like and subscribe. Stay tuned for that. Tom alluded to this before, or he mentioned it. We're going to be doing a video about how to do 50x leverage. Why does 50x leverage matter? Because Bitcoin can move a small amount, but you can make a big profit off of that. We're not talking about leverage that you have to mortgage your house or anything like that, right? We're not talking about, I know there's a scary leverage out there, Tom, where you used to dabble in. That's not what we're talking about, right?
Yeah, I am not selling options. No one's coming for my home. The worst that can happen is that my position gets liquidated.
Awesome.
So there's no downside other than managing your position, which might suck for some people, but doesn't suck nearly as bad as being on the wrong side of an options trade.
Would you also be willing to do a video this week or sometime about prop firm using your indicators? Would you be willing to do a video about how to use your indicators with prop firm trading? Is that useful?
Yes, absolutely. I do think that prop firms are this cycle's NFTs and meme coins. I think we'll look back and be like, hey, that's what actually happened. That's where all the hype was. I'm new to prop firms. And the reason I like them is that I'm using a software now from Traders Post, company I work with, that allows me to scale out prop firms. That means a win on a prop firm account, I don't actually just have to manage that one account. I can manage 5, 10, 15, 20 accounts at once. And people are getting payouts of like 10, 20, $50,000, $100,000 payouts from some of these prop firm accounts. So I'm very interested in seeing how our indicators might work for that. It's a whole other kit and caboodle, because when we're talking about trading for 50x leverage Bitcoin, we're talking about day trading, week, month positions, right? Whereas in prop firms, they're all intraday and all your positions close at 4 p.m. So Eastern Standard Time. So that is wrapping my head around all that has been pretty interesting. What we found is that our indicators work very well for that sort of space, but we have to recalibrate our thinking. So you can join my journey if you're totally willing to understand that, hey, I'm new at this too. But I do trade prop firms live Tuesday to Friday, 9:30 a.m. Eastern Standard Time on Traders Post YouTube channel. So go check it out over there.
Could you pull up Traders Post, the YouTube channel, just so they can see that, because maybe they don't understand Traders Post, TRADERSPOST, Traders Post. But can you also show very quickly your Traders Post account so people can see that you're multiplying your trades across platforms, or is that for another day?
Yeah, happy to. So this is my Traders Post dashboard. So I can go to my strategies. Actually, right now I only have the one subscription tied to that, but I can connect. Different brokers to it. So let me just go to my broker here, and I can connect multiple different prop firms to the same strategy. So I can just connect again and again and again and again. I can connect as many as I want, as I feel comfortable with. Obviously, just the monthly cost for the prop firm, and then trade them. And I can have one strategy for it. I can have multiple strategies for it. Actually, there's caveats for that, but that'll be, we'll revisit that instead of a longer video. But yeah, prop firms are like all the rage right now.
And can you show the YouTube channel?
Yeah. So if you go to the Traders Post YouTube channel, you'll be able to see we have a playlist here for Price Action Live. Here's where you're going to be able to see all the past times we live traded. But if you sign up to the channel, you'll be able to see us live here, and you can see what it's like to actually trade prop firms. I do this every day except Monday, and it's fun. It's exciting. There's a lot of money that can be made. Mike has, between the two of us, has gotten payouts from prop firms, and I know personally a bunch of people who have done it. So I thought it was like a pie in the sky thing. You just hear it on Reddit forums and what have you, and like, nope, there are real life people that we see every day who are making money from this.
I highly recommend you check out the Trading Bot sessions. Tom, if you can pull that up, the Trading Bot sessions interviews that are being done on Traders Post. This will give you some insight into the people who are doing prop firm trading. Look, just go to the videos tab. I don't, what? Oh, it's right there. He's interviewed, Mike Christensen from Traders Post has interviewed these prop firm traders, and it's really interesting to hear their stories. Tyler G here, he was a construction worker who became a trader, very successful trader. He interviewed a mom who also uses prop firm to make money, and the interviews just keep going on and on. I'm actually editing 3 more now, so that's going to be on this week. Highly recommend that you check out Traders Post, and you'll get more of Tom there too, explaining a lot of details. So if you don't want to wait just yet for the content coming out on this channel, head over to Traders Post YouTube channel, and you can see Tom and everyone over there. Very exciting.
All right, guys. That's it for Sunday Fuel for this week. I have been your humble and meek host, Sacred Prophet. I'm going to be back next Sunday, but you got to like and subscribe to the channel because we go live during the week. We do all kinds of different things. You don't want to miss some of this content. And people look back and are like, hey, I could have made 600% on that move, and I wish I paid attention to what you're doing. Yeah, you gotta, right? I made the indicators for free, put out the content for free. Unless you want me to drive to your house and knock on your door and say, hey, put on this trade, I don't know what else you want me to do. I can't be everywhere all at once. I want you guys to make money, because the more money you make, the more money I make. And don't you want someone who has your best interests as their best interest? Look, I'm not doing this to be altruistic, Peter. I want to make money. But for me to make money, you got to make money. You got to make money.
Help me, help you.
Help you. All right, that's it. And we'll be back next week for more Sunday Fuel.
No music? We're not going to... No music?
Just don't worship.
We don't have to.
I know that.
Don't worship me.
I know that everything I say sounds amazing. But take down my picture off your wall and put your picture up.
Don't worship me.
Or get a picture with me.
I only carry the flame. The prophet ain't the name.
All right, guys.
The prophet ain't the name.
Have a great night.
Every name.